Hello, and welcome to our next NAP. NAP stands for Nonprofit Auditor Points, and I'm Irina Oishkova, your nonprofit auditor. I have a small CPA practice in downtown Oakland, and we serve nonprofit organizations by providing assurance services, audits, and reviews. The NAP's designed to help nonprofit community with accounting and auditing questions. And hopefully they will be useful to understand some concepts that are related to accounting, finance, and audit. These videos are not designed to be authoritative. These are just my experience and knowledge that I would like to share with a nonprofit community, including management, bookkeepers, financial staff. And today we want to talk about statement of functional expenses. This is the most important statement in nonprofits, financials, in my opinion. And it's also very unique for nonprofit organizations because this statement, it only exists for nonprofits. If you're familiar with the main financial statements for for-profit companies, they include balance sheet, income statement, and cash flows. Nonprofit organizations also have those statements. Balance sheet, which is statement of financial position, income statement, which is statement of activities, cash flow, same name, cash flow, and statement of functional expenses. Why statement of functional expenses exists in nonprofit world? For profit organizations, for profit companies, bottom line or net income typically indicates profitability and efficiency of the company. Therefore, income statement, it can indicate either net loss or net profit. In nonprofit entity, difference between revenue and expenses it's not called net income or net loss. It caused change in net assets, and it does not necessarily indicate efficiency or effectiveness of nonprofit, because nonprofit can increase its expenses by simply providing more program activities. So it's not directly related to efficiency and effectiveness. Therefore, in for-profit world, state income statement exists as indicator of profitability of the company. In nonprofit world, income statement does not serve that purpose. That purpose typically served by statement of functional expenses. What exactly statement of functional expenses represents? It specifically represents what it's the name on the statement. It allocates all natural expenses in three functions, and it's very important to understand natural type of expenses in three functions. So typically, statement of functional expenses has natural type of expenses on the left, and on the top you do have three main functions. When we say natural expenses, that would be salary and related expenses, payroll tax, benefits, insurance, depreciations, supply, travel, grants to other nonprofits, and so forth. Those are natural type of expenses that answer to the question specifically what was purchased by the organization. Function, nonprofits conduct three types of functions. They conduct direct program activity. It's activity that states in the organization mission. For example, nonprofit that provides after school classes for elementary school, their purpose is to provide after school activities for children grades kindergarten through sixth grade, for example. So this is the direct program activity. Every dollar that spends directly for that mission would be direct program activity. That's number one function. Number two, it's management in general. And number three, fundraising. management in general and fundraising called supporting activities because they're necessary for the organization in order to do their program activity. Management in general, fundraising typically always exists. For sure, management in general exists always, and fundraising typically also exists with a very few exceptions. They're supporting activity, but they're not program. So management in general are expenses that organization spends to perform management and general administrative tasks. That would be payroll of administrative staff, such as bookkeepers, secretary, some work of executive director, and would be supplies that's spent in the office, and so forth. Fundraising activities, that would be activity that organization performs to raise funds and work with their donors to raise awareness and ask for donation. So these three very independent functions, and each natural type of expense can be allocated to each function depending really where that expense was spent. For example, supplies can be direct program activity if these supplies were used in the learning activity for children, because the organization mission is to provide after school classes for elementary school. If these supplies, let's just say pens and pencils, were used by children during that program activity, that would be direct program expense. If these supplies were used by administrative staff, who bookkeepers, executive director who just manages the organization, that would be management and general expense. And let's just say these supplies were used during the major fundraising event, or used by the professional fundraiser that performed some activities to raise the funds on behalf of nonprofit. That would be fundraising expense. Therefore, natural type of expense, any natural type of expense can be allocated to any type of the function. Again, three function. But again, so it depends what function it was. The organization needs to allocate these expenses, every natural expenses, into three functions. And for program activities, it needs to be allocated for each program separately. If the organization has two or more identifiable, materially substantial separate programs, the program activities should not be lump summed together in one column program. They need to be allocated for each program separately. It is critical because this information will appear not only on your audit report, but also on your tax filing. Therefore, in order to have a proper allocation of the expenses by function, the organization have to come up with categories of natural type of expenses. We know with the functions would be program, management and general fundraising, and natural type of expenses, typically it would be your general ledger type of expenses. However, if your chart of accounts includes 40 natural type of expenses, you would not have 40 line in your statement of functional expenses. You most likely will group some of the expenses in one common natural group. For example, your payroll taxes, and other related payroll expenses can be lump summed together in a payroll and related expenses. Various benefits can be also lump summed together. Various insurances can be also lump summed in one line. Maybe travel and can be put together with some other, maybe air travel and other expenses. Could be facility expense. If facility expenses included rent and paying for various utilities, could be lump summed together. Therefore, typically statement of functional expenses will have about 20 lines. And each group of natural expenses needs to be allocated by function as we indicated. So how it needs to be allocated? Allocation would really depend on the internal policy and procedure of organization. One most common way that the small organization use to allocate statement of functional expenses is direct method, meaning each expense is analyzed separately and allocated to various functions. Some invoice can be allocated between 2 functions or 3 functions. It's a very direct way of, and probably one of the most accurate ways to allocate. However, it's very tedious method to allocate the expenses and probably not going to be efficient. Only small nonprofit organization can afford to allocate each expense. Most common way to allocate expenses by function is used when the management develop methodology unique for each group of expenses. For example, for payroll expenses, payroll and related expenses, including payroll tax and benefits, they can be allocated based on the time cards and time that employees of the companies spent for each function. So the organization can have a list of employees and estimate the percentage for each employee spent on each function, then have their total payroll, and then that payroll will be allocated between 3 functions. So this way, this allocation can be done for each employee, and that would be for payroll and related. Now, then, if the organization is working from the office and has the facility expenses, including rent and utilities, that percentage can be used also to allocate the facility expenses if the staff works from office. So therefore, if the program folks running program activities from the building, so part of that facility expense can be allocated directly to program. Administrative staff their area and facility expenses will be allocated to general management, and same with the fundraising. For other type of expenses, each natural group of expenses needs to be analyzed separately and methodology needs to be developed. For example, depreciation expense. So if depreciation relates to the building where the organization, for example, just only conducts operating activity, nothing else, then that depreciation will go directly to the program expense. If that's purely administrative office, then the depreciation related to that office will be presented on general administrative. And if the part of the building is used for program and part for general management, then depreciation expense needs to be split accordingly. Very critical to understand natural type of expense and know that natural type of expense cannot have the same name as the function. For example, if one of the function is program activity, natural type of expense cannot be program expenses, because program expenses, it's not natural type of expenses, it's function. Same with fundraising expenses. Fundraising, it's a function. Therefore, on the natural type of expenses, it needs to be split as supplies, food, entertainment, and so forth. It cannot have just fundraising expense because it's not a natural type. Another very important thing to understand, that some expenses are by nature cannot be program. For example, insurance for board of directors by definition cannot be program because it's a supporting expense. Or if we see natural type of expense, grants to others, it's a part of the program activity. It cannot be general management, it needs to be direct program activity. Also, sometimes we see very often that nonprofits allocate payroll expenses in one way and payroll taxes in completely different way. Typically, these expenses are very correlated with each other and needs to be allocated similarly. Therefore, after what we recommend, after nonprofit develop methodology for each group of natural expenses, also take a look at overall allocation to make sure that its numbers make sense how they're allocated to program management and general fundraising. Allocation on a statement of functional expenses is one of the largest estimates. It's involved management estimate. And on the audit report, we do have a footnote where we say that it is management estimate. However, even though it's an estimate, the standards do require that it needs to be reasonable and consistently applied, meaning applied consistently between various accounts, groups, and from one year to another. So the readers of financial statements can actually compare 1 year of allocation of statement of functional expenses to another statement of functional expenses. And the last, but a very important point that I would like to make, that a lot of readers of financial statements use the statement of functional expenses to assess efficiency and effectiveness of nonprofits. How do they do that? They prefer to see that nonprofit allocates at least 70% of all expenses to the program. What it means that 70 cents of each spent dollar, donors and funders prefer to see that go to direct program activities, not to admin and not to fundraising. However, this is a very common understanding, but each nonprofit have to tell their own story why their percentage might be higher or might be lower. For example, nonprofits that funded by federal government typically have to be very efficient, and they allow to spend very little on general administrative, so their program percentage might be higher. Nonprofits that are very young and spend a lot of funds to build infrastructure and work with their fundraising with the community to raise awareness of the work that they do, they're probably going to spend in the first couple years more to general management and to fundraising, and going to be less than fundraising. Regardless what your percentage, I think if nonprofit communicates their story behind this allocation to their fundraisers, to their supporters and donors correctly, the statement will be presumed positively, hopefully, by the donors and supporters. So therefore, statement of functional expenses, one of the most important statement on the audit report on the Form 990. Nonprofits need to develop methodology to allocate statement of functional expenses. Methodology needs to be revisited annually and communicated to the accountants and the individuals that maintain books, and hopefully your organization performs that allocation inside your accounting software. In QuickBooks, you can use either jobs or classes. There are other functions you can use in Xero, and other accounting software you can do it as well. For smaller nonprofits, we've seen the allocation is performed outside the accounting system, which is also allowable as long as the organization has methodology, applies it consistently, it's reasonable, and revisit it every year. Thank you so much. Hopefully you learn something about statement of functional expenses, and I'm looking forward to see you next time. Have a wonderful day. Bye-bye.